All right, we are back. Mike and Jerry, May 16, month after the carnage. Our wounds are healing quite a bit, a little bit at least. Jerry, how you feeling?
I feel great. Um,
Because I
it's
saw you a month ago for breakfast, and you did not look great.
I
You looked a little pale.
wasn't happy.
No.
Yeah, no, it's okay not to be happy, but it's funny how you can get over it, and just got to wrap yourself around this whole idea of we did all the trades we should have done. We followed the system. I give ourselves an A+ for doing that, and I don't think our system is broken too much. I do think it's good to go over what we learned during these periods. That's fine. We learned something,
Mm-hmm.
but then embrace it and just realize that this is what the trend following systems do, and this is what they did. And it's a lot of our trading is on autopilot, or probably all of it is on autopilot. So we're sitting there regardless of our emotions and not liking this performance, and the trades just keep getting done. So great, that's the way it should be.
Yes. That was, uh, I believe, maybe before I saw you. Uh, I told you I talked to Ed, and he quizzed me on that. Quizzed me on, he doesn't know the specifics of more the specifics of my trading that you know. But so he was kind of quizzing me on the system and all that stuff, and then he asked, "Well, have you been faithful? Been faithful to it?" I said, "Yeah, yeah. I'm just being a baby, and I know this is just annoying. I'm just throwing a tantrum." And he said, "Well, I said, well, I just hate not winning all the time. It's just, growing up in sports, you just want to win every game you play, sort of thing." And he says, "Well, you could ask your wife if she'd rather make money every day or be faithful, you know." So
I like that.
uh,
That's good.
yeah, so I think she'd rather choose being faithful for sure. So uh, hey, this is kind of life, and this is just kind of how it goes sometimes in the markets. So um,
One of
uh,
the questions on the Turtle True False test in 1983 was that traders should love their losses. And of course, the answer is true because losses are part of the system. You should love your system and be dedicated to following the rules. But I think what was really meant by that is taking small losses, and not these big drawdowns. But that's part of it as well. But
yeah,
yeah, it just goes to show you that when you have a systematic approach that lets profits run and take small losses, it sounds like, wow, anybody can handle these small losses, but they can build up over time, the actual small losses and the drawdowns of letting the profits run. Because all human beings, when you have that open trade equity, you really feel like it's yours, and you've mentally spent it or mentally saved it, and it's a mark. We don't want to go too far below that. But these systems that we employ, that we've decided to use based upon a back test, they really just promise to make good money and be fairly consistent, but they don't do much of promise on preserving open trade equity. And you did some amazing analysis. You should just briefly mention your analysis that you did. I know you've written about it
yeah.
of a few years ago, where we had big profits in a certain year following the system, open profits, and then we gave it all back, and then we ended up closing the year, or these sort of um, generic systems, long-term trend following, just very, very generic, nothing special about them. They ended up finishing at equity highs or something. Go ahead and explain that.
Oh, yeah. I had to. It's probably more therapeutic than it was me trying to find an answer to something. It was just okay. Yeah, this happens. No problem. That's kind of the genesis of where that work came from. But I even had to share it with you before I published it live because it was just so good. and you lived through it. I was kind of on the sidelines observing as a young guy at that time, but you lived through it. And you know another thing I think that I wish that we had was this type of exchange with you guys back in the day. So we can only do what we're what we could do now. But oh man, like how did Jerry, how did all these guys like handle those drawdowns? In those early years, like what was going on? Let's get a peek into their you know uh, behind the scenes, so to speak, and see them and see how they talk, and what kind of emotions are going on. So I thought this, looking at 2008, because everyone, that's kind of where I feel, me included, a lot of people came into trend following, the new crop, at least, because it was such a big year. It was such a, and everything else was getting crushed. So it was the obvious looking thing, the obvious asset class to say, what the heck's going on with that? Like, what are you guys doing? And uh, but even that year was so emotionally tough. It must have been so tough because the swings. So if you read the article, I'll put a link into this podcast. But started the year off gangbusters, up 60-70% by the end of Q2. So you're a July 4th break, just high fiving beers, extra burgers. Sure, you're rocking it, lobsters, whatever. But then over the next 60 days, you gave it all back, and you were actually down. This is viewing on the daily P&L. So I think it's September 22nd. It was down 1% for the year, up 70 to down 1. Ugh. And I doubt people were saying, "Oh yeah, that's our system. We follow it, no problem." No fucking way. People were, "Oh God, we're looking like how we were looking at breakfast a month ago." We're just like, let's just keep talking positively to ourselves. It's gonna be fine. Just keep doing it." But oh man, you don't sleep as well. You don't look as good. You don't eat as much. Your mind's spiraling. But there is calm in knowing, and I believe I heard you say this one time on a podcast, I think with Covell. You said, "I'm often confused. Oh no, I'm often annoyed, but I'm never confused on what to do. Like it's telling me what to do. I know it's the correct thing to do, but we are the link of well, you just okay, no, you got to do it. You can't let these feelings disrupt you." So okay, going back to '08, that simulation, that aggressive system. Now we're down 1 at the end, later half of September. And then I think over the next 30, 40 days, it was back up to 80 for the year. And then it finished at, 93, 92 or something like that. So, and expanding on that, so that's quite the ride. That's quite the roller coaster ride. And all of that amidst a lot of noise and a lot of news in the world going on. Has the game changed? What's going on? Is this a special situation when we should break our rules because, hey, the world's kind of in a weird spot. We've never seen this before. All those things come into our brains, and there's a lot of downtime. How you handle this boredom and just sit around and follow your signals and stick with your positions. But the same thing happened in '06 and '07. Two other 40% drawdowns. And yeah, that '08 drawdown, that peak to trough 60-day was about 42%. So you had two other about 40% drawdowns in 2006 and 2007. They were kind of short-lived, but similar. And they both finished the year well into the positive territory. So, that was a tough 3-year stretch. Not all stretches are like that. Not all good years are like that, but they can be. So that's the real context, is like for new investors, for investors that maybe are new to trend following. This stuff can happen. So just kind of be ready for it. And it just, hey, just know that it stinks. And we're upset just like you are. So I think that's the real lesson is just there's nothing wrong with them. It's taking these hits on the chin before. It doesn't mean that they're all going to be like the past. Some could be longer, deeper, and slower to recoup, and things like that. But it just does a good job of just staying around. And then, like now, we got kicked in the mouth, and now we still got Coco, and here goes Coco again. Almost getting back to the highs.
you can kind of see where long-term trend followers in managed futures, where they use the volatility adjusting and correlation adjustments, and they're all just very transparent ways of preserving the profits. So you don't go through those periods and you have these big profits and subject to giving them all back. The clients don't like that. So you can see the allure of those type of strategies, and where they didn't have that same performance, I'll guarantee. They may not have made 90% by the end of the year. Now, let's just assume the same trade size and stuff. But they didn't have that particular drawdown, and they can trot out Sharp World and say, look, the Sharp's higher. Yeah, we only made 30% or 50%, given the same leverage.
Sure.
But look at the big drawdowns. You went from plus 60 to 0, then plus 90. This is nuts and crazy. This is irresponsible. It's crazy trading. It's gambling. And so, but then with our strategy where we don't do those things, we just let the profits run. We don't try to scale back good trades for any reason when the trend is still positive, and we're long term, so we're subject to giving back the profits. This is another reason why it's so important for us with this particular classic strategy not to include open trade equity as part of our capital we use to base the trades on. Yes. You've got this 60% profit. You're putting on new trades at a 60% increased trade level, and then it all goes away. And you're a basket case. I mean, you are really you're really getting close to losing all your money and hitting a fatal risk point. The risk of ruin doesn't have to be 0. It can be whatever you want it to be, minus 30, minus 50, whatever, or greater. But yeah, so you can sort of see that, and I'll guarantee you though that from a risk-adjusted point of view, in other words, risking $1 to make 2 or 3, I'll guarantee you that particular system that made 90%, having gone through that 60% give back, did in fact make a lot more money than any sort of similarly leveraged program that had vol control and correlation management and vol adjustments and that sort of stuff. There's no doubt, but once again, that's why you have to trot out Sharp ratio, because with Sharp ratio, they win. Without Sharp ratio, we win. And of course, no one really thinks that Sharp is appropriate for a non-normal distribution. Anyways, Coco.
Yeah,
let's talk about Coco.
Oh, Coco, here we go. I thought she was dead. I thought she was going to get ticked out. I know. On one of my exits, it literally got as close as it could get, and it did not tick it. And that was I still have a big position in that thing. So it is, it's helping me claw out of, some of those April losses here. So this just goes to show you, though, again, like, it gets close, it's this thing. It's had such a good run. Now I'm into the story, the nonsense, the bullshit in the head, the looking at the charts. Look at this thing. This is too crazy. It's going to come down. Come on.
Yeah.
That is incorrect.
Another thing that came up with recently was, you've heard this on podcast. They're very adamant about this too. They brag about it. It's really, it's really an added alpha, and that is increased vol is a good signal that the trend is over. Why wait for the trend to be over based upon your breakouts or your moving averages? Just whenever there's a material amount of increased volatility, that's just the market telling you time to get out. No problem. And it's just like, sorry about that. Because I'm pretty
Right.
sure both of us have all the cocoa we put on initially 2 or 3 years ago. I don't even
Yes.
remember when it broke out, but it is kind of fun. And for me, it's one out of 400 positions. I mean, literally, it could not be, it's hard to, how could it be less significant? And yet every day I'm going there and looking at this cocoa trade, just hoping it makes new highs so I can post it on Twitter and thumb my nose at all the guys who got out because, they bragged in podcasts last year that in January of 24, I guess 24 or 23, they were selling as cocoa hits all-time highs. They're bragging that they're selling it
Right.
because the vol's increased. And
Yes.
so once again, you and I will walk away with the cocoa profit trophy. No one was going to make more money on cocoa than you and me, but we had some volatility. We had, from a sharp point of view, not as good. Not as good. Tell your client that a 200 ATR profit is not as good as a 75 ATR profit because they didn't have to sit through the volatility on this 75 ATR profit. I mean, clients are just like, what are you smart people doing? Who talks like this?
Yeah, there's no sharp exchange rate at the bank. You turn them in and they say, "How'd you earn this?" With a higher sharp. Oh, here you get $2 instead of $1 back. No, no,
Yeah,
no,
yeah.
no. It all counts. The dollars are it. So that yeah, and I will say when I've done my research on the because I've dialed up the aggressiveness over the years, so it's kind of been annoying that I didn't get the 2020 to 22 high leverage returns. I've just gotten the high leverage drawdown recently, so that's fun. But I read also, and I checked this out, which is interesting. Um, some of when you run at a higher leverage, it can even improve, especially when you're using core equity or stripping out open trade profits or something, a mechanism like that. Uh, it could improve the risk adjusted because when you get into these dips, um, you have enough capital still because you stripped out. It's a little more stable when you get new positions. So in some cases, you can get a signal within a drawdown that could take you out of it. All right, you get a cocoa position in a drawdown that's like, oh, here we go, and you get this big winner that takes you out. But these lower leverage, especially these vol control, these massaging, it could take you a lot longer to get out because, well, you're going to be cutting the winners when you get the winners again in the new trend phase. So you better not go into that dip because it's that much harder for you to get out. But when you have the old school, bread and butter trend approach, and then you get a cocoa, you get maybe a gold, or who the hell knows what's going to be next. Yeah, I read that in an interview with a trader, uh, a well-known trend trader, and he says, yeah, if I wasn't higher leverage, I wouldn't have gotten this position in my dip that got eventually this one got me out of it. If I was trading lower, I wouldn't be able to take it because I wouldn't have had the capital to do it. It's like, oh, that's weird. That's counterintuitive a little bit.
Mm-hmm. Yep.
So, but I think there's a lot of other problems that are not as uh, that are counterintuitive with this vol control and this other. You're trying to obey two masters. You're trying to make money, but then you're also trying to retain clients and not annoy them. You're trying to really massage the feelings, which I think is very. It's a sign of the times too. I feel like the culture in general is just a little bit more. Uh, uh, they don't have the pain tolerance as we might have had maybe when you were getting started. It was kind of more, let's get after it, let's kick ass, let's do it. Yeah, big drawdowns, whatever. Even the stock market had up until that time had about 20% annualized vol. No, 20%. Like you run a 20% annualized vol today, everyone's like, oh, Mike, calm down. That's still too high. Like too high. Y-
I think that people also are kind of, you take Mulvaney, for example. I think
yeah.
they know what they're getting. They're ready.
Yes.
And he um, is back to his traditional drawdown profile. And it's pretty 50, 40, 50 drawdown or whatever.
Hmm.
And then so people are like, okay, had a bunch of fun years with that and making good money. And then I didn't see much of a drawdown either. Now it's not like I haven't seen these type of drawdowns many times before in his track record. I knew I'm okay with it. I allocated appropriate amount of money to his fund that because of that drawdown profile and my personality. But then you get the CTAs, managed future CTAs, and even you and me, which we don't have that profile. And people can get lulled into this idea. We sort of talk about Sharp and about risk control. Oh, ad nauseum risk control. Uh, I think on some of the podcasts, every fifth sentence has to contain the words risk control. And then you have a period like we've gone through, and people are like, well, wait a second. I bought into 50% drawdown with Mulvaney with $100,000 investment. I'm putting millions with all you guys. And I got the impression that I would not be faced with these dramatic, sharp drawdowns.
Mm.
I mean, they're not approaching 50%, let's say,
Yeah.
but they're still way more than I was anticipating and that you led on. And so I think people are duly freaked out and they're like, yeah, I guess they're not making money and they're always susceptible to all the markets going against them, which is pretty much what happened to us in a big way. Um,
Yeah.
we were incorrectly positioned in every market, and the vol started getting much, much higher.
Yeah. Yeah. I think some of the biggest CTAs right now are in their biggest drawdowns um, on record. So um, yeah, I'm not sure if they anticipated that. They thought, oh, now we
No,
got this managed. We're not going to have a 20% dip. We're not
yeah,
ever going to be down 20% year to date. At least when looking at a daily return stream or anything like that, because we got this all kind of massaged and it's good. Well, as I say, yeah, now what? So this is why it's good, at least with like less parameters and you really commit um, because when you have less parameters and you're not there trying to outguess a more complex system now when you get hit in the mouth. Um, now I could look at this system, look backwards, and say, "Oh yeah, it's had periods like this. Man, that must have sucked." Oh yeah, like the '08 thing again. Oh, I only remember the end of the year. The whole general year was amazing. I remember '08. It was great for trend. Yeah. Oh, but I don't remember that. Oh, whoa, whoa, whoa. I don't know if I
yeah.
could was able to do that if I was actually having to do it. It's like, well, yeah, it's easy to scoot over on a back test. It's easy to scoot over in a conversation, but damn, man, that's 168 hours a week. You're going to have to sit with it over a week after week after week in your own head of what do I do? What am I feeling? If you don't have it, the constitution to say, this sucks, but I know what to do. I'm just keep doing it. Yeah.
These type of
Uh,
drawdowns that happen all the time in stocks, way worse. They're never talked about. They're never looked back over time and bemoaned about what you had to sit through and how horrible it was. No, there's a stock premium. You just sit with it. The stock system is the S&P 500 algorithm. You just sit with it, and you get what you get, and be thankful and happy for it. It's kind of written in stone. You're going to get it. And these drawdowns, well, they don't even call them drawdowns. These periods where these crashes, where you lose half your money or more, you're supposed to embrace them as what you need to do and add to them. And so I think this is the sort of a philosophy we need to adopt as well. That we have a system. It's kind of like the S&P. It's different, but it's just a bunch of rules. We're way more diversified. We're way better at preserving capital. We're way better at making more money, given the unit of risk. And we just need to say, hey, this is what the system produces. And it's right. I'm delivering trend following to all my clients the way I see it. Stocks, single stocks, massive diversification, hundreds of markets. And this is what you should expect. And sometimes you're going to expect this, and we're not. It's trend following beta, and this is what I think we need to embrace and to educate people. I think I want to be standing there and with the flag raised and having it had been raised for years when trend following does well, when it goes back to outperforming stocks for long periods of time based upon its approach and its level of diversification and the shorts and all the benefits that it has over just being long equities and weighting them on a market cap. And I'm not going to there's too many other people who are filling the need now of this generation you talked about that doesn't want pain and suffering and doesn't realize you need to sit through drawdowns and losing periods because they love their stocks and losing periods are very infrequent and they're over with very quickly. And so there's enough people doing that. Um, I'm going to be yelling at them when they start giving me money when trend following does well again, saying, we told you to invest and make this a permanent part of your portfolio, and you screwed up, you didn't do it. Now what are you going to do in the future? You need to do the hard thing, do the right thing, hang in there, and love your losses and love your drawdowns. Ha!
Mm.
One of these days, that day will come. It'll come back where we'll just, for many, many years, we'll be outperforming stocks and um, obviously having lower drawdowns because of the level of diversification that we offer.
Yeah. Yeah, I think it's been seems to be a characteristic of the last 10, 15 years. The uh, cross asset correlation just goes sky high, at least for a period of time, and meanwhile, in other times, it was kind of more in a healthy behavior versus this kind of risk on, risk off that we got used to for so long. And now, when I talk to people about, where are we positioned? What are our positions now? I said, it's kind of weird. There's longs and shorts all over the place in each sector. So it doesn't look like this risk on, risk off right now. That sure, we got the whole risk off, for that first part of April, at least for several days, but that was I remember that being a persistent characteristic of the markets for years. It seemed like, oh, here we go, risk on,
Yes. Oh, it's so horrible.
It was
Now it's
terrible.
pretty
Yeah.
easy to have a lot of diversification within the sectors. We're long and short currencies, long and short interest rates, long and short stocks pretty evenly in the stock sector because we trade all individual stocks and a lot of stocks in sustained downtrends and a lot of stocks still in uptrends. And some stocks we have in our portfolio getting long now. We have no shorts, no new shorts in a few weeks.
Yep.
But
Okay.
in the commodities are, the commodities are pretty quiet, except for the ones that have been in sustained trends for a while. Gold.
Yeah.
Gold is.
Gold, cocoa. Trying to think. Even I guess coffee's kind of cooled off a little bit too.
I think it's good. I think it's good that we decided to do this podcast. I wish we'd have done it a few weeks ago. You know what we should do next time? In the midst of the worst drawdown ever, we need to just pick up the phone and get on and talk about doing a podcast so we can because that's the time you kind of want to do them. Not to
Well,
show how tough you are, or this doesn't bother you, but just to talk about it because really you just need to be dispassionate about all these things, whether it's good performance or bad performance. You need to build your systems to where you can survive these periods and live to trade another day um, and let it show yourself and show your clients that you're not freaked out and you're not panicking. you're
Yeah, and I think
following the
that's
strategy.
that's where if you're tracking, no one really is going to do it. If you track your core equity, your total equity minus your open risk or your minus your open trade equity, it's a much more stable, steady increase over time. Um, and your open trade equity is just flying around like crazy, especially to the degree of your leverage that you trade at. So yeah, I think everyone's just looking at the total equity all the time, and they're looking at these drawdowns like, oh my god. But you know, you don't. I don't. I haven't seen much dip in my core equity at all.
No,
So it's
no.
like, okay, well that sucked. Gave a lot back. Again, especially at my new or higher leverage amount. So but okay, but my core is still ticking, and uh, uh, we let it fly around, and eventually it's going to fly our way, and it's going to, we're going to get some good moves, and we're going to get out much later on and lock in those profits. And again, it's just a systematic thing, but um, but hey, I understand. We're running a business. We got to make money for ourselves. We got to stay in business. All those things. So all that matters. This isn't just some theoretical, experiment sort of thing. But sometimes like you kind of have to view it that way, and just again just do the right things all the time. Because even if you're working out and eating right and sleeping right, you're still gonna wake up days where you're just like I don't want to do it. I don't want to go. I'm a little too sore. I'm just like, I don't know. I'm just not in the mood today. You know, that's all normal. Um, but you still have to feel it and go, all right, I got to do it. Just have to do it is what we do.
I
And
like this
get up.
thing that you said earlier about therapeutic versus answers. I think, we do. It's good to do some things that are therapeutic, and I like to trade these long-term systems, and I like to scroll through the charts
Yeah.
uh,
You mentioned
with
that yesterday. Go
yeah
to the
with
10-year charts. Right.
yeah, just go through a 10-year chart with your breakouts on it, and just scroll through, and you see all these huge trends, and you see all the reasons that the computer chose these parameters. And then you see the drawdowns, and you're like, oh, that was no big deal because look what happens after that drawdown. You make all kinds of money, but we can't see that now. And so I do think it's really good to get your confidence up and to remind yourself why you're doing what you're doing, why you think you're bringing something that the clients need, and why you chose this particular strategy. It was not some stupid random thing. And but it is, I do think, going through those charts and reminding yourself of the power of long-term trends, and they are going to reverse some of the biggest trends ever that made you stand apart from the competition because you made so much money on these trends, more than anyone else made, are going to have some of your biggest drawdowns. So do you really want to get rid of those drawdowns at the risk of getting rid of making more money than everyone else on a particular trade? I don't think so. You got to be very careful about that. I talk
Yeah.
to young people all the time about, um, sticking to your system and not changing and stuff, and not freaking out and not trying to come up with new rules that avoid drawdowns, uh, because they could hurt your overall profitability. But I do think it's a good. But some people do need to change. You should learn. We should talk about what we learned over this period. And the old cliche is you learn more from your losses than you do your winners. And but I think it's fine to sort of say, hey, I can't go through this again. I lost too much money, or I'm not doing something right. I feel it. I know it. I need to do better. I think that's good too. And I think, but on the other hand, you don't want to throw everything out because you don't feel good. But uh, a couple of things well, one thing that I learned was, well, that I reminded myself. It's hard for me to learn anything now because I'm so old, but um, you keep getting for good and for bad. You can't predict these markets. Like at your depth of dislike of this performance, you're just like, yeah. probably tomorrow's going to be horrible. No, that was the low. I mean, you didn't know it. The S&P turned. And so you're like planning, okay, what am I going to do? I'm going to put the trades in quicker. I'm not going to wait for the close. I'm going to I'm going to write down everything I think I'm learning, and because this is getting really bad. No, it's the end. Keep doing your trades. You can't predict. I'm really going to buy this stock. I got a stock that breaks out at the right at the bottom. I don't think I did, but let's just say you did. You really want to buy this stock? You really want to put on this new trade? Because you just know it's just going to turn into a loss, and you really cannot predict. Yeah, as bad as it feels and sounds, just follow the system. Take your small losses. Cut back. If you're losing too much, trade smaller. That's the best rule of all time. That's the best money management rule of all time. If you got yourself in trouble, trade smaller. If you think you don't want to have this type of volatility, trade smaller. If you're getting too close to what you perceive as your risk of ruin, reduce your leverage. If not, full speed ahead, follow those systems, because that's what the cutback rule does. It allows you to, okay, that's over with. I'm now right sized, back to following the system to a T. It's a genius.
Yes.
Turtle, circa 1983.
Simple business, simple survival rule. Stay in business rule. Stay in business. That's
What did you
most of the
say
battle.
about what did you say about one of your heroes? He told you about cutting back his positions. No, he talked about he closed his system. He closed down his trading. He said, if my system loses 50%, I'm going to stop trading. That's the evidence. He did it, and I think you told me that was the low, and the system took off and was wonderful after that.
Yeah.
Exactly.
Yeah.
Losing a certain amount of money is no indication whatsoever, necessarily, that you're doing something wrong, or that it's not going to all turn around, or that it's all going to keep going lower and getting worse. Once again, these are the statements and declarations that humans make when they're very emotional, and they tell themselves, got to be true. No, not true.
Yep. And I think the opportunity, some of the best opportunities will come in periods like this, when you're down, when you're kind of beaten and battered, and you're, huffing and puffing, and just, and then you get that new signal, to get into,
Yes.
I don't know what I've been getting into recently, like, soybean oil, canola
Yeah.
oil, Brazil,
Yeah.
Real, like, all right, big boy, next one, next pitch, like,
We had, we had,
you better get in it. And it's like,
we
well,
had
I was down, I wasn't feeling, I
money
don't want to
management.
lose anymore. I'm just gonna
Money
lose.
management. Yeah. I don't want to. Money management is like one of the worst ideas of all time for so many people, because what they have done is they essentially said, I'm not going to follow the system because of money management. If you and I said, I'm not going to follow the system because I don't feel good, and I don't want to lose money, everyone would say that's ridiculous. You have to be disciplined and consistent. But you throw the word money management on top of it, you can do whatever you want. And
Oh, it's just,
you cannot be wrong, because I'm just trying to preserve capital. The math gods, the trading gods, they don't care what excuse you give. You didn't do the trade. You missed Coco. You missed a big trend. We don't care. It wasn't even on our radar. This trade was going to happen. You were supposed to be on it. It was going to drag you out of the drawdown. You decided, for whatever bullshit reason, whatever label you put on it, you're not going to do the trade. I cannot help you.
right.
Your
All
money
right.
management, your risk management has always been in place. What is it? The small loss. You had it all the time. You didn't need another one.
Mhm. It's another sign of the times, because, you told me exactly what I wanted to hear. We cut back. We reduced our
It's
risk of dying. Okay, yeah. That, of course, I don't want to feel any more pain. So just whatever you have to say to make me not feel that anymore, I'll take it. And I think that's what works. That is what has been accepted lately. That's not
Oh,
always
let
the
me tell you,
case.
I just thought of this. It's worse than that. It's way worse, but it is a sign of the times. and that is it's virtue signaling.
Mm,
Yes, it's virtue signaling. Because you sit down with somebody, due diligence, it's all about risk management. What's your risk management? How many layers of risk management do you have? I'm really concerned and interested in this. Well, I mean, I'm the greatest risk manager of all time. I got all these layers. You know what? All I hear when people say that is, I've got reasons I'm not going to do the next trade. I'm not going to do the next trade.
yeah.
And no one is saying, hey, dude, I am super worried that you are going to miss the next big outlier trend following trade. I don't know a lot about trend following, but I keep hearing it's all about these outliers and these big trends. Do you have risk management that would prevent you from fully exploiting this big, huge trend? And I'm afraid, yes, they do. We had Salem on the other podcast with Richard Brennan, uh, Turtle
Yeah.
Talk. And I just remember Salem over the years. I would talk to him on the telephone in the 90s and in the 2000s. And it was just, he was the world's greatest at whatever was happening, nothing, nothing. What'd
Yeah.
you do? I did the next trade.
Right.
That's it.
I,
Well,
yeah.
I'm freaked out right now. I'm like really destabilized. I just did the next trade. Still down 30, still down 20. And then all of a sudden, I'm like, how you doing now? Oh, we're up 20 for the year. Yeah, really?
Yeah.
How did you do that? Really, when you look back, it's kind of humbling because how did we do anything? You should be able to remember your good years by the markets that did all the work for you. And all you did was get out of the way and not screw up that big trend. We handled that cocoa perfectly. Cannot be handled better because we haven't done anything in 2 or 3 years.
Right. Just now, hopefully, I don't know what she's gonna do now, but she's rolling again.
Yeah,
um, Another point. Speaking of to the risk management, the sign of the times, the opportunity comes when you're down. All right, I'm gonna take this way back now. We'll take it back to World War II. Okay. All right. World War II. Oh, sorry. After World War One, I think the British and the French really had a real good chance to keep the Germans at bay, but they were so beaten down by World War One. They didn't want to lose another. They lost a lot of soldiers in that World War One, and then it stirred up again pretty shortly after. 20, 30 years later, and I think they were just like, no, we're done. We're not. We're not getting involved in this. We've had it. We've lost a lot of kids. We're done.
yeah,
Well,
yeah.
yeah. Then fucking Hitler goes into Poland, and then before you know it, you got tens and tens of millions of people dead. 5, 10 years later, it's like they had the opportunity then to do something about it. They just didn't want to do it. And okay, you could say, I understand why you didn't want to do it. I understand, but you miscalculated the risk there by a big deal. And then ultimately, you had to go in later. And then ultimately, a lot of other people had to go in and sort this all out. And then it ended up in a lot more death and a lot of missed opportunity. It just stinks sometimes when you get these opportunities when you're just not in the mood. I don't want to do it. I don't want to do it. I don't want to do it. And that's really the path to freedom leads through that feeling of I don't want to do it. I don't want to do it.
Another thing I thought of, I think about this all the time, and that is there just needs to be, for everyone's sake, yours and mine as well. There just needs to be, uh, yeah, there needs to be this new organization. I don't even know if it exists, but basically, you say to it, you give them your rules, and they do the trading for you. You have nothing to do with it, and you can't touch it. I mean, to some degree, you can put handcuffs on yourself, I guess.
Sure.
There is no reason to have traders, or there's no reason to have any. There is a possibility of getting rid of discretion, and we just need to buy into this. How do you trade? How do you manage your money? I gave my rules to my guy like 5 years ago. They implement it. They charged me a few bips. and they get the commissions, and I look at my statement once a month. This is the 21st century. This, yeah, we don't need to be involved with this stuff, especially if it's going to ruin our day, ruin our life, ruin our period. And
Yeah.
um, yeah, no, it
We're not there
makes no
yet.
sense.
We're not at the
No,
robot stage yet. Still got human
we definitely
beings.
need robots.
Hmm.
No,
We have
we
robots.
can't.
We just need the human beings to hit the buttons still.
Yeah,
Um, but yeah, we'll probably get there. We're just not there yet. Um, and we got feelings and got the ups and downs of that, and having to work through all that. But
I think also by not taking it completely out of your hands and your fate being subject strictly to the rules that you give to a third party, I think you don't put your system together. I think you'll have a higher chance of putting your system together with all the best rules if you knew you were only going to have trades done by these rules. Because, yeah,
oh
like,
yeah,
yeah,
there's no degrees of allowing to go in there and touch it
yeah.
up and tweak it
What are you
around,
going to
right?
do when this happens? Yeah, I never thought about that. I'll probably just reduce my positions. Nope, nope. Got to have an algorithm right now. Give me the algorithm, or we're not going to reduce them. Oh,
Right.
okay. I guess you're right. I have to come up with this.
It's like
Um,
setting. It must be like setting sail, uh, and you need to have that boat built. You need to have the crew uh, in a very strong mental emotional state before they kick off the shore. Like you can't rebuild this boat out there. You what you're going out
right.
with is what you're going out with. So you better
Oh,
build this thing to last. And
let me see if you have any experience like this. This is a good example. Um, I used to run like a fund of funds, and half the money was invested in my fund, and
Mhm.
half was invested in CTAs and hedge funds. And as obsessed and concerned as I was on a minute by minute basis on my performance, I never gave a crap about other people's performance. Dude, it's half the money. I mean,
Yeah,
it'll be fine. It'll be fine.
right.
These guys got long track records, hedge fund. Sometimes they lost a lot of money, sometimes they made a lot, but I'm in it for the long term. I'm not even thinking about their performance.
Wow.
My performance? So what is this? It's pride, it's
Yeah.
relative performance. It is, yeah, it's a lot of psychological things going on. I don't know if you've ever made other investments in things,
I have.
but
Yeah.
I don't give a crap about these other investments. I don't even think about them. And,
Once the money leaves my account, I assume it's all gone, and I don't think about it. I don't even think about it. It's just
yeah,
it doesn't exist in my accounts anymore. So hopefully it comes back and hopefully it's bigger and sure. But
yeah,
I don't think about it.
yeah,
Wow. Yeah, wow. That's a great real life example right there. And it makes perfect sense that it makes no fucking sense because it's like it's
yeah,
still your money. So
exactly.
it still counts. But
Yeah,
wow, yeah. So I think that's probably an attachment issue too. Like you attach well, this is my life's work. This is my trading. My name is on it. Uh, I'm in a good
yes,
mood. I am useful. I am worth. I have a purpose when I'm making money with this. If I'm not, I'm nothing. All that
yes.
could be very dark self talk, and I have done this many times.
Oh, yeah. That's exactly what it is. And it's also this need to be watching things every second of the day.
Yeah,
Because if you're going to, the one people who don't need to watch anything very often is systematic trend followers.
right. Yeah, we have that one advantage when we don't use it
No,
sometimes.
yeah. Even if you never do a discretionary trade, you're still staring at the screen all the time
Uh-huh.
or being very concerned. Um,
See, we have
yeah,
a lot of the similar, right?
yeah, yeah.
We have
I think
some
everybody does. I think everybody
connection
does.
with that. Yeah, yeah.
I meet
Uh,
young traders and they're like, "Hey, will you teach me how to trade? Can I be a turtle? You should give back." Oh yeah, they do that too. You should, you must give back. What you were given, you must give to other people. I'm like, dude, you can figure this out for yourself. It's all on the internet. It's all on the internet. It's most of the trend following ideas are in the public domain. You can figure out a really good way of trading. let's just all get together once a month and commiserate about our losses if you want to. It's a psychological thing, but not a trading thing.
Yeah.
Yeah,
Now, rules are rules, and
yeah.
you can find those out. Come on, especially the testing stuff and even the off the shelf stuff will get you started, a lot quicker than uh, guys having to do it 30, 40 years ago, or had to kind of scrap it all together, conjure it up, and waste a lot of time thinking about like Bill Dunn and Ed and even Richard Dennis too. I know they probably just went through all the trials and a lot of wasted effort to try to find this this works. Oh, and this something similar works. Interesting. Versus like we know they've paid the way. Now we're way far. We don't have to waste all that time. You know. But yeah, you still have the emotions that they have, but they were the ones that did it. Despite that's the trick. That's where it's at. Go down the path of commitment, not bouncing around from keto diets to low carb to high this to low whatever the fuck that.
Whatever the latest guru says
Yeah, stop it.
on
Just
Instagram.
down the path of commitment. All of it other
Yeah,
stuff is talk. It's just
yeah.
boredom. It's medicinal for boredom, and
I didn't give
not
you a chance to
liking.
answer the question about what have you learned, or what have you been reminded of that you temporarily forgot about. I said we can't predict. We get too pessimistic, too optimistic. It has nothing. Things can turn around very quickly, positively or negatively. What have you recommitted yourself to, or what have you? Do you come up with anything new that you need to change?
Change? No. I changed myself. Change my internal talk and how I respond to the ups and downs emotionally, because I don't deviate. Um, but it could be a living hell sometimes when you're losing, and uh, and I talk to myself certain ways, which could be dark side. That's real dark side stuff. So 2008 experiment, and like, oh, you look at other years, like, oh yeah, this would have sucked, but right out of it, this would have sucked. Just keep doing it out of it, and um, so I think that's learn more intimate things about myself, my psyche, and all those things. But as far as the trading goes, it works. It just sucks sometimes. That's the fucking tagline I would give it. It works. It just sucks sometimes. And
I think it's so difficult to be different. It's so much comfort in being just a little bit more like the SocGen CTA index and those type of traders. And I think, and then when you're different and then you underperform, oh man, that's the worst thing ever.
well, yeah, I
Yeah.
think that's another advantage that again, a different culture, a different time. 30, 40, 50 years ago, when the traders are kicking off, and Dunn, Rich, Bill, other guys like that, and they didn't even know other guys were doing it, and they all kind of were coming to a similar answer and on how to trade and this philosophy. But now it's, well, if I want to make it, I got to look like these guys, and then I got
That's
to
settled
copy mostly
science.
what they do, but then just be a little different. And like,
It's settled. So much is settled science. The volatility, not using stops, scaling back on volatility and correlation. It's a settled science, and it's not settled. It's an orthodoxy of managed futures, but it's not good trend following like we practice.
no, that comment you made early was when the vol increases, it's a sign of the trend ending. I suppose, I imagine that is a very, very short term. If it's effective at all, it's effective in the very, very short term.
It's
Um,
effective if you use Sharp as well.
okay, yeah.
Yeah.
So, all right, well, careful, boys, because if you're going with that and you're really leaning into that, you're gonna end up designing your system, if that's a major part of it, for bad markets, for whipsaw markets.
Oh
May
yeah,
you,
that's
you may
right.
do you may do better in this time, but when we get more cocos, you fuckers are going to
Oof.
be in the dust, and then what? Yeah, then what?
That's right. Oh, that's
So
so true. That's so true. I mean, that's a very good point. I love that point. Yeah, that's the problem with if we get more if we get more outliers in the future, our historical performance will look way less than the future performance.
oh
That's
yeah,
that's where you want to be. That's where you want to be.
yeah,
The possibility of surprise is to the upside.
hmm hmm
At least that's not the way of saying it. If there's a surprise to the upside, we will profit from it.
yeah, we
If
allow
there's
for
a
it.
surprise that trend following is going to do better in the future, the trends will be better. We will definitely benefit from that. Yeah,
Yes, yeah,
I love that. That's a great point. And that's the problem is on one hand, we have these binary systems, entry, exit, stop loss. It creates thousands of trades, thousands of sample size in the data, in historical data. And then all we have to do is carry it forward and keep doing those trades. And yet the performance is dominated by a very small number of trades.
yeah.
And so there's this sort of contradiction there that we have a large sample size, but the profit is dominated by for a few of those trades. Um, and yet, if those trades get a little bit worse, well, we know what happens. We go through long periods not making money. If they get a lot better, we may not have seen the heyday of trend following.
Uh, yeah, that was another piece that I thought about a while ago, on just simple Pareto principle. You know, a few of the trades account for most of the profit, and however you want to measure it, it's probably not. I think I use dollars in the, which isn't. I wouldn't do that. Use a capture of ATR or R multiple or something. Like what the total amount of ATR capture that all your trades have netted out to over time. What percentage of them account for 80% of them, and it's like 15
Yeah,
percent. Yeah.
yeah.
And it's if you use dollars and cents, forget it. It's well under, I think, a 0.5%. Because the latest trades are going to obviously make much more than the ones that you put on 30, 40 years ago. But
Oh, that's why you need to, the denominator needs to be ATR.
yeah, right. You got to
Yeah,
normalize it,
yes.
right.
So you normalize that profit
Yeah,
and loss. Yeah, yeah.
yeah. But that's why I even put just made a little screen video of the trades, and the one that still comes to mind is the Palladium, and Palladium was one of the best trades that uh, this system, simple trend system, captured. And I think it was a 4-year trade, 4 years. So you're thinking about Coco right now, and you're halfway in, right? Because there's so many times. Who knows? It could, there's going to be another trade in the future that breaks that record. That's going to be 5 years or something. But there were so many reversals in that Palladium trade where you were just like, you could have, if you go through it slowly, it's impossible to replicate the exact amount of time you would go through if you lived it. But you can go through it slow or move or print it out and move it with like a notebook or something so you can't see the future and go, oh God, this thing, it's done. Like, we should get out of this thing. We've made enough money. This has gone on long enough. And
Yes.
historically, this system doesn't hold things longer than 200 days anyway. So we're at 400 days. It's done. Like, no, because it becomes 1,000 days.
Yeah,
and here you go. You messed it all up now because now you got back in smaller, and you fucked that all up, and that's it. One mistake could really hurt you. So um, that
you
it's
can't
just another
predict.
part of the process that stinks. It just stinks. Like, oh God, yeah, one mistake could really mess. Yeah, yeah, it can. So you need
Oh,
to be disciplined.
exactly. I mean, we were taught that entries are so important because you can't miss a big trend. And if you don't, there's nothing you can do. If you put a trade on it and it goes against you, you take a small loss if you don't put the trade on at all. And the first trade out of the group in February 1984 was February heating oil. It was a big,
Yeah.
huge trend. January didn't go anywhere. March didn't go anywhere. It was only February heating oil, and half the room didn't do the trade. And
Yeah,
there were a few weeks from the course that said you must take all the trades.
that's crazy. Yeah,
Yeah,
yeah. I mean, but that's such a good example of like people are
yeah.
people, and like that happens.
Mhm.
But you have to not let it happen. Like you want to be in the winner's circle. You want to kick ass. Like you can't make those mistakes. You just can't.
Yeah,
Um,
there's no reason for them to happen nowadays. Set it up and hire
yeah,
someone to do the trades, and they're not allowed not to do them.
right. Stops in. Right. Automatically get
I don't
hit. All
know.
those things. Yeah,
Yeah, yeah, yeah.
yeah,
And that's just a complete um, absorption and commitment to systematic trading. I'm so dedicated. Are you dedicated to systematic trading? Yes, I'm the greatest. I told Rich in the interview, no one will be more disciplined than me. And I was probably the least disciplined initially.
mm,
And well, if you really believe in systematic rules based, give me your rules. I'll do the trades for you, and I'll call you next year. Like, hell no, I can't do that. What if something bad happens?
mm.
Well, you just got finished telling me how great your system was and how much you loved it and you believed in
Yeah. Well, I don't like the wiggles too much, and I get nervous.
it.
Yeah. Okay. Yeah. This is all good though, because that's all like opportunities for yourself to, you know, connect with that. How do I feel, and how do I respond to my feelings? Like, yeah, I always get my best ideas from a new trading rules in my drawdowns. Oh yeah, no shit. All right, because you don't want to feel anything and you want to get rid of it. All right, you want to keep busy. You want to just, yeah, this is going to make the difference next time. Mm-hmm. 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 Right. Right. And I just go look back at, like 40, 50 years worth of daily and monthly data. And like there are times in there where you're just in a drawdown for days on end, weeks and months on end. And you would have had the same feelings then. So the best thing you know to do now, you have the advantage of all of that research, is to just do the correct thing today.
Yeah, and you get in these situations, which I think we were in recently, where you're like, you're just like cruising. Everything's cruising along, and you're like 50 basis points every day, 50 basis points up, 50 basis points down. And then you hit the tariffs, and you're down two for the day. And you're like, oh my God, that's crazy. Next day, four, down four.
Yeah.
Yeah, it gets worse. You're
Yeah.
thinking like, there's no way it's going to get worse. This is the worst we've seen. I
Yeah.
remember I was traveling once. I was in Australia. This is many years ago. And I would get a fax in the morning of how we did the previous day. And on Monday, I got a fax and it was minus 4%.
Yeah.
And then the next day, I got a fax minus 4%.
Yeah.
And I was like, I think they sent me the same fax.
Oh no.
No, 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 not the same fax. 2 different days.
Yep. Yep.
So, it really is it takes guts. But I will say one thing, I wish you finish here soon, but yes, it takes guts. And to trade the way that we trade now, it is difficult. It is very, very difficult because you're going to set yourself up for believing in these systems and saying, I'm willing to take whatever they give me, one entry, one exit, and a stop loss. And I really don't enjoy it. And if you didn't abide by those rules, then you were just less of a person. You were not disciplined. You were not consistent. It never worked out. You ended up making less money, even though you were trying to um, reduce risk, or you were trying to do something that would stop the bleeding. Nowadays, they just write it in the code.
Yeah.
Write it in the code. I don't like this, and that about historical performance, the volatility, the drawdown. Well, then we'll just write a rule for it, and we'll tell everyone we're following the rules.
Yes. Again, just more signs of the times. Now you could just
Sign of the times.
put an acronym on your title, and
Quant.
anyone will believe you. Oh yeah,
I'm a
he
quant.
knows what he's talking about. Look at
I'm a,
all of his
yeah,
acronyms. He's very smart.
yeah, yeah,
Obviously,
yeah,
he
yeah.
wouldn't do anything
Oh,
stupid.
this is another thing that really pisses me off. I wasn't going to say this, but I'm going to go ahead and say it. There's just
Uh-oh.
these groups of traders out there, yeah, that they're always, and this one group has been doing it forever, from as long as I can remember. They call themselves scientists and quants and all this bullshit, which I don't. There probably are. I just wonder, why are you trend following then? And so, anyways, that's how they promote themselves as scientists and quants and chief scientists. And I'm like, there's real scientists out there who are saving the world. And you really want to move a bunch of numbers around and do trend following and call yourself a scientist? Okay, whatever. So, anyways, they talk about how quantitative they are and sciency. They used the word sciency recently. I tweeted this,
Oh boy.
and so they call Richard Dennis a pit trader. So Richard Dennis was this pit trader.
Mm.
So yeah, no good.
Oh,
Pit
because
trader.
that's where he got his start, right? Because
Well, he didn't know anything other than the pits. It's the pits. Well, we got a hold of trend following over in England somewhere. We did the quants and the science stuff, and we made it wonderful. What a bunch of horseshit. It's just the biggest bunch of dishonest lies I've ever heard, all to puff themselves up as some sort of amazing quant person. It's just stupid and sickening, and I hate it. And they do it all the time, and I criticize it whenever I see it and make fun of it, but they keep doing it, and it's just one of those things. Richard Dennis was smarter than any of those guys in managed futures these days, and don't even talk about Bill Eckhart. The Turtles had
he's next level.
yeah, he's just next level, and we had tremendous access to computers, and yeah, these guys were math geniuses. So they don't take a backseat to anybody, even though they did go into the pits. So shut the fuck up about pit trading.
You just take it back to stupid Isaac Newton. He didn't have a PhD. Idiot. He's an idiot.
Yeah,
That's like
yeah.
tongue-in-cheek joke, but just because they don't have this degree or from here or got started here or whatever.
Or more importantly, just because these other people do have those degrees.
Sure, that's part of their shtick. I know.
It's marketing. Yeah, it's marketing shtick.
Yeah,
We all see it. We all know it. Yeah.
But come on, when it's he did such a service to the investing world in general, Richard Dennis. So, I'm not gonna. I could never be a person that says, "Well, yeah, but he stinks because." I heard about that 50% drawdown once, and did he blow up? Like,
yeah,
you guys are you're starting and stopping at times that's convenient for you, and I this is not a correct conversation. This is not. This wouldn't pass at NASA. This wouldn't pass with any serious people. So I'm done talking. That's it. I don't want to talk about it anymore.
It's disgusting.
Yeah, I don't like it.
Yep.
Just say thank you.
All right.
Just say thank you. And we've decided to try to take things further. Whether or not we did, but we're trying to. So you say thank you. Thank you. Yeah.
What else you got? I'm out. I went one step too far even. So anything else, or you want to call it a day?
No, I think we crushed it. I think this was raw. And I think this was great.
All right, put it out there, and put it on YouTube, and so Oleg can see it.
All your friends, yeah.
Shout out to Oleg.
Get Oleg, he needs it. All right, Oleg, we'll get you, buddy. I'll get it on YouTube and all the rest of them this afternoon, so everyone has it for their weekend downtime. But I like this one. I think this is one of my favorite ones. It might be
mine
the top.
too.
Might be the top.
Oh yeah, it probably is. Yeah.
And hopefully the bottom. Good. Hopefully the bottom.
Good therapy. Good therapy.
Yeah.
All right. Thanks for including me. Have a good week. Have a good weekend.
You too.
Okay.